Welcome to our Crypto News in 10, a daily podcast bringing you the latest news about crypto in under 10 minutes. Here's what's making waves on Monday, March 30th, 2026. The European Central Bank flips the switch on tokenized finance, officially accepting certain DLT-issued securities as collateral starting today, arguably Europe's biggest on-chain milestone yet. Over in Cannes, EthCC 9 opens its doors to thousands of builders with a new institutional forum set for tomorrow. In Minerland, Marathon Digital moves to close a $1 billion note repurchase today and tomorrow after unloading 15,133 Bitcoin. That's billion with a B. If you were expecting OpenSea's C token today, there's news. It's been pushed back. And we'll close with another ECB change landing today. Collateral framework updates that phase out temporary measures and tweak access rules for banks in resolution. Story 1. Europe just made tokenized assets central bank grade collateral. As of today, the Eurosystem will accept marketable assets issued in central securities depositories, or CSDs, using distributed ledger technology, or DLT, as eligible collateral in central bank credit operations. Think tokenized bonds issued via Euroclear or Clearstream's digital rails. The ECB emphasized two things. First, it starts March 30th, 2026. Second, it applies where the securities are issued through regulated CSDs and remain reachable via Target 2 Securities, T2S, the pan-European settlement platform. Fully native, CSD-less blockchain assets aren't in scope yet, but the central bank says it's exploring that next. Why this matters? Banks can now raise central bank liquidity against properly issued tokenized assets. That should boost issuance and improve secondary market plumbing across Europe, moving tokenization from pilots into mainstream market infrastructure. Zooming out, the ECB tied eligibility to existing settlement and risk standards and flagged ongoing work to potentially admit assets issued and settled entirely on DLT in the future. If you're a treasurer or risk manager, that's code for this. The issuance venue and post-trade stacks still matter. Expect Euroclear and Clearstream's digital platforms to be busy this quarter. Story 2. EthCC 9 kicks off today in Cannes. The conference runs March 30th through April 2. Last year's edition drew around 6,500 accredited attendees and 10,000 participants, numbers organizers expect to match or top as Ethereum marks its 10th anniversary year. On the agenda, roll-up economics, restaking safety, MEV mitigation, and a growing slate of real-world asset sessions, RWA for short. New this year, an institutional forum called the Agora, produced with Kaiko, convenes tomorrow to stress-test market structure topics with banks, venues, and data providers. For builders, there's a dense side event week. TesDev is also hosting a one-day event today. Expect news drops, pilot reveals, and plenty of hallway alpha. Story 3. A miner de-risks big. Marathon Digital sold 15,133 Bitcoin between March 4th and March 25th, roughly $1.1 billion, to help fund the repurchase of zero-coupon convertible notes due 2030 and 2031. Closings are slated for today, March 30th, and tomorrow, March 31st, subject to the usual conditions. Management framed the move as balance sheet cleanup that trims outstanding convertibles by around 30%, while freeing up strategic options as Marathon expands into AI and high-performance computing infrastructure. Markets noticed, the stock popped on the disclosure late last week, and the trade underscores a broader trend this cycle. Miners monetizing part of their treasuries to fund data center growth and debt reduction. If you're tracking miner supply dynamics, that's a lot of BTC hitting the tape in 3 weeks, and a lot less leverage on the other side. Before we continue, here's a message from our sponsors.
Need elite developers fast? Elite Coders connects you with rigorously vetted senior engineers in 24 to 48 hours. Staff augmentation, dedicated teams, or full project delivery, we've got you covered. Visit elitecoders.co to get started today.
All right, let's get back to it. Story 4. No C today. OpenSea's token is delayed. The marketplace had telegraphed a late Q1 window and even teased a March 30th event, but CEO Devin Finzer says the team won't rush a launch that only happens once. The delay is open-ended, pinned on choppy market conditions and a desire to roll out when the product and program are fully ready. For NFT traders, the read-through is twofold. First, token-linked catalysts can slip in tougher markets. Second, OpenSea's tokenomics, utility, and distribution now get extra time in the oven, which could be good if it leads to real marketplace incentives instead of transient airdrop churn. We'll watch whether competitor volumes, creator fee policies, or a temporary fee program change user behavior while everyone waits. Story 5. Another ECB change hits today. The Monetary Policy Implementation Guidelines update takes effect. The tweaks formalize the gradual rollback of temporary collateral easing and clarify how certain counterparties in open bank resolution can regain access to central bank operations if they meet strict conditions. The upshot for crypto-adjacent capital markets, especially tokenized real-world assets, is subtle but important. Eligibility, haircuts, and settlement plumbing are converging back to steady-state rules just as tokenization ramps. Combine that with today's DLT collateral greenlight and you get a clear signal. Innovation is welcome, but only when it plugs cleanly into Europe's post-trade and risk framework. Quick recap. Europe just moved tokenized assets into the collateral mainstream. EthCC opens in Cannes with builders, funds, and an institutional forum ready to debate what comes next. Marathon trims debt by funding note buybacks with 15,133 BTC in sales. OpenSea's C token, once eyed for March 30th, is officially delayed, and the ECB's broader collateral rulebook updates land today. It's a pivotal day for the rails beneath crypto, both the technical ones and the monetary ones. Thanks for listening, and see you tomorrow.